Every once in a while, a stock shows up that looks too small to matter until you realize what it's actually building. Imagine a tiny device, smaller than a grain of rice, that can live inside your body and send doctors real-time data about your health. That's the world Profusa, ticker symbol PFSA, is trying to build. And right now, this little company trades for just a few cents. So, is PFSA the next revolutionary biotech play, or just another penny stock fantasy? Let's break down both sides of the story, the bullish dream and the bearish reality. Profusa isn't your typical small-cap biotech. They've spent over a decade developing tissue-integrated biosensors, implants that can continuously monitor things like oxygen levels under your skin. The flagship product, the Lumi oxygen platform, already CE marked in Europe. That means it's approved for sale, and according to Profusa, they're aiming for commercial shipments in early 2026. That's huge, because we're talking about a device that could help doctors monitor chronic wounds, circulatory disorders, even reconstructive surgeries, all in real time. Now imagine if that tech eventually evolves into continuous glucose monitoring, the same market that made Dexcom and Abbott billions. And here's where the bullish story heats up. PFSA's market cap is tiny, we're talking small single-digit millions. So if they actually hit their milestones, manufacturing ramp-up, European sales, maybe US trials, this stock could re-rate fast. This is that classic story stock setup. Massive market, disruptive tech, and a price that hasn't caught up yet. So the bullish believers say, you're getting in early, before Wall Street even notices. But every story like this has two sides. Here's the reality check. Profusa might have cool tech, but right now they're still pre-commercial. Revenue? Almost zero. Profits? Nowhere close. And commercialization in medtech is brutal. They'll need to scale manufacturing, navigate regulators, secure reimbursement, and convince hospitals and doctors to adopt something completely new. If any one of those steps stalls, the 2026 timeline slips, and investors lose patience. Then there's the microcap problem: low trading volume, volatility, and high dilution risk. These companies often raise cash just to survive, and that can crush existing shareholders. And let's not forget competition. The world's biggest medtech giants are all exploring sensor-based health tech. If they move faster, Profusa could get boxed out before they scale. So the bearish take is simple: big promise, but even bigger risk. So what's the takeaway? PFSA is one of those rare biotech stories that feels part science fiction, part moonshot. The upside? Potentially massive. The risk? Practically everything. If you're bullish, you're betting on 2026 being the year they actually ship something real. If you're bearish, you think they'll burn cash and stall before that happens. As for me, I'm cautiously optimistic. This isn't a buy it and forget it stock, this is a watch it closely play. If we start seeing early commercial deals, revenue, or FDA progress, then it could get interesting fast. What do you think? Is PFSA an early-stage gem, or just another biotech dream? Drop your thoughts in the comments, hit that like button if you learned something, and don't forget to subscribe for more deep dives like this one.